Dear investor, in this session, let's discuss our outlook on the markets and valuations, the result season that has gone by, a few sectors with the focus on NBFCs, and ultimately our focus spaces. To start with, we had talked about valuations in the last session as well. Our outlook is that markets at the current juncture are fairly valued. Any rally from here on should be seen as liquidity driven. This is also on account of some amount of slowdown that we are witnessing in the result season also. Earlier, FMCG as a pack would deliver strong growth. In this quarterly result season, we have seen signs of slowdowns in that space also. The result season overall has been a mixed bag. Few IT companies have delivered strong results. However, overall the breadth of the results has left lot to be asked for. In the financial space, we can split it up between banks and NBFCs. Banks generally have delivered numbers which are significantly better, in some cases better than expectation as well, while NBFCs only the best have managed to meet expectations or come near expectations. The others have not delivered good numbers. Focusing on the NBFC pack, once again the issue of liquidity and scare which we saw towards the end of last year resurfacing. In quick succession, several houses including SL Group and lately ADAG Group companies have shown stresses. They have undergone rating downgrades, and that has caused once again losses in the mutual funds holding those papers, and in turn the vicious circle of investors not putting in money, actually redeeming money from those funds, and hence the liquidity freeze for a temporary period of time. The better NBFCs we have seen trying to diversify their sources of funds. However, CPs were the cheapest source of funds, and once that space dries up, overall cost of funds for NBFCs have moved up. That has made NBFCs with less pricing power to show reduced margins, and their growth have also been impacted because of reduced competitive advantage. Only the NBFCs where pricing power is high, where penetration levels are low, have delivered good numbers. Microfinance companies where the runway to growth is large have continued to grow very well. In the past period, we had seen oil move up and had threatened to touch 82 a barrel as well. However, in the after Mr. Trump came in and talked about higher oil prices and indicating his preference for lower oil prices have moved down and are currently trading below $70 a barrel. This is good for a country like India, which is largely dependent on imported oil. Every dollar drop in the oil price saves the country 1.2 $1.3 billion and has a good impact on the overall pressure on the currency. We saw currency appreciate over the last 1 month. In terms of the future, we are on the verge of seeing the results of the general elections that the country is as of now undergoing. Like we said, valuations are fair. In the event of a volatility around the election period, we believe investors should be positioned to take advantage of the same on both legs of the results. Invest if you get a downtick before the election, some bit of monies, and some bit after the elections, unless of course the elections throw up a combination which is seen to be unstable. Thank you.